This is a big what if, but what if this whole thing fails? What if it goes kaput? What if they don't get their differences reconciled? And that $1.9 trillion stimulus plan, the sort of the battle holy grail for this new administration, what if it just doesn't happen, period? What would be the fallout? Scott Martin, Kingsview Asset Management, Susan Lee, our superstar here at Fox Business. I got to wonder, Susan, since the markets have factored in that it's going to happen, it's unlikely that it doesn't, but if it could. I mean, there are already a number of Republicans who've got at least a couple of Democrats with them worried about the price tag, worried about jamming in some of these other features. So then what?
Yeah, what a tangled web we weave, right? Don't you like that? That was for you, Neil. So yes, I think the markets are anticipating some sort of stimulus, whether it's 1.9 trillion or just a few billion. I think they pretty much said that you have to follow the money, and the money is telling you that there's going to be money printing coming from either the White House and the government administration or from the Federal Reserve, as you've heard 2 days now with Jerome Powell, the Federal Reserve Chair, in front of Congress. So I think people are anticipating something, and don't forget, you still have another $1 trillion package infrastructure that will be also discussed and pushed for apparently already by the White House. So I think Wall Street needs something.
If they don't get it, Scott, now of course Mitt Romney has a column today talking and bemoaning about all the issues that others are ignoring, that a lot of this is backloaded, that a lot of this spending, $700–800 billion worth, is meant for 2022. So this idea that we urgently need it like now isn't out there. So again, I'll ask you what I asked Susan. If this doesn't come to be because of trip-ups on these issues, how will the market respond?
It'll feel a lot more than just a simple insect bite, Neil, where you can put some cortisone on it and take care of it in a few days. Because if you want any evidence of that, I'll tell you, look yesterday. Yesterday, the NASDAQ is down about 3.5% in the morning. Fed Chairman Powell comes out and starts talking about, don't worry about inflation. We're here for the markets. Unemployment is still terrible, et cetera, meaning we'll be there for you, Mr. or Mrs. Market, as well as his partner in crime, Super Dove, Janet Yellen, Treasury Secretary, who's been out talking about more stimulus, more trillions, wherever we can find it, print it, sell it, and send it out. So the reality is, Neil, this is kind of baked in the markets to a degree, I believe. But the more it's talked about and the more it becomes a reality, the more the market loves it. The scary thing I will tell you, though, is even if Chairman Powell wants to get out of this situation, say, hey, if data changes, maybe we'll change our role or slow our role, the markets freak out. So he's got to stay on the path he's on for now, at least.
Do you think, Susan, that that's another superhero analogy if you think about it? He's in that role, Chairman Powell, of being like the superhero is going to guard and protect the markets. His stance over the last 2 days is, don't worry, I've got your back. Does he?
That's right. Yeah, that's exactly what you've heard. You've heard all the right things, meaning that we're going to stay lower for longer. We're going to continue buying more than $100 billion of bonds each and every month. And what I took away yesterday was that 6% GDP forecast that he made for 2021, saying that the recovery in the back half of this year is going to be stronger than the first half. And that will be, by the way, pushed through by the Federal Reserve or the White House and the government printing more money. There will be trillions of dollars there that will liquidate the market. And as we say, that you have to follow the money, and what growth managers and what the money is telling you is that it's still going into stock markets. That's liquefy. So I used the wrong verb there, but you know what I mean, meaning that you have to follow where the money's going, and it's going into stock markets right now and risk assets.
So real quickly, Scott, do you see that changing? I mean, give me sort of like your lay of the land for at least the next few weeks here.
No, and we're cautious as far as bonds go, Neil. So Susan's right. Money goes into stocks. As a result, it goes into Bitcoin. It goes into gold, which are things that appreciate when there's so much Fed printing. And I love the numbers Susan threw out. 6% GDP growth. We've got an improving economic picture, yet Fed funds rate at 0, and the Fed's buying $100 billion a month. Hey, why not start the party and keep it going? And
by the way, 6%, I just want to follow up on that, Neil. 6% is almost 3 times the average for the GDP growth that we've seen over the past 10 years. So that's a lot. That's a big bounce. That's your V-shaped recovery right there.
But do think we're coming from awful levels, right? So it is good. I'm not minimizing that, but again, it's coming from depressed levels.
Of course.
But we'll see. Guys, thank you both very, very much. And we were talking about